Guys having a good evening. So I briefly wanted to go over the importance of trading with candlesticks and really show the value in the information that you get from using candlesticks. So for some people this might be a moot point, right? But there might be some new traders that really don't understand the difference, and they just need it broken down a little bit further. So I hope to do that here today. So if you're trading on Robinhood, for example, this is the standard layout of what the price action looks like, right? It's just a line graph showing you when price goes up and price goes down. And this has a lot of useful information. Like, for example, I can tell that we're currently in an uptrend. I can tell that we hit a resistance right here. It looks like it's headed back up to try to retest that resistance. We have nice pivot reversals here, here, and here. Nice reversals here, maybe a double bottom or even a triple bottom. Actually looks like a inverse head and shoulders here, right? So it does give me a lot of information, but there's so much more information when you're comparing what you see with candlesticks than when you see with line graphs. So right now we're looking at a line graph, and so I just want to switch over to a candlestick real quick just to show you what it looks like, and try to break it down a little bit further so that it makes more sense, right? So now this might look very confusing, and so I promise you it's not. I just want to break it down really quickly. And to do that, let's describe a couple of these, right? So let's just zoom in here, and boom, this is perfect. So real quick, this section here, this pretty much this rectangular part here. So this section here, this rectangular part here is called the body, right? So let's identify that as the body. So this is the body. For this green candle, this is the body, right? And then we have also what's called a wick. And for example, this one here is a lower wick. We have lower wicks and upper wicks, which mean they have different significances. They mean different things, right? Or really, they mean the same thing in opposite directions, right? These are also sometimes called shadows. So if you guys ever hear me talking about candlesticks, you'll hear me refer to this as upper and lower shadows sometimes. And so real quick, so just to break it down a little bit further, and kind of chop up what all of these colors are, real quick, all of these green candles, so this one, these are all bullish candles. And what that means is they show price action that opens at the bottom of the body, and buyers came and bought it all the way up, and it closed at the top of this body, right? So that's bullish price action. That basically tells you that the price went from, in this particular one, the price went from 328.3 all the way up to 329.93, right? So that's bullish because it goes up. All of the red candles that you see on the chart are all bearish candles. They're basically all the red candles all open at the top of the body, and then they close lower than where they open, right? So all of these candles close at the top of this rectangle, and open high, close low, open high, close low, open up high, close low, right? All the green ones open low, close high, open low, close high, right? So that's that. The shadows, the upper and lower shadows that you see, are basically buying and selling pressure, right? So like this one here has a lot of selling pressure because the price opened here on this right here on this this line. The buyers bought it up. So this was initially a green candle before, right? And the buyers bought it up, and then sellers came and sold it off, and it sold off, and this candle's green this whole time. The candle's green until it crosses over this open line, and then it becomes red, and now it's a red candle, and it sold off and sold off all the way to down here, and then some buyer stepped in and bought it back up, and this is where it closed, right? Same thing here. This one pretty much opened kind of at the same level that that one closed at, right? And it opened here, and then they bought it up. The buyers bought it up, but then the sellers came and sold it off, sold it off, sold it off way down to the bottom of this lower shadow. And then you see that buyers came and stepped in and bought it back to this level here, right? So on these green bullish candles, you see that the price action opened here. It is likely that based on what I see here, it's likely that it opened here and then it came and pushed down first. So it was initially a red candle, and then buyers said nope, we want it, and then they bought it and they bought it and they bought it all the way up to the top of this line, the top of this wick here. And then the sellers said, nah, we want it cheaper. And then the sellers sold off, sold off, sold off, and they sold it off until it closed right here, right? Another example is this one here, right? And this one's a little confusing because it has shadows on top and bottom. But this particular candlestick, this one here closed exactly where it opened, and then this one opened here at this bottom line at 327.04, and then based on what I'm seeing here, they bought it and they bought it, right? And then it sold off. It sold off and it sold off all the way, and it became a red candlestick. Right as I crossed that threshold where the candle opened, it turned into a red candlestick down here, and it was red this whole time. And it was red until it got here. The buyers came and bought it, and they stepped in and they bought it, and the buying pressure increased, and then it bought it all the way up above the original price that it opened, and it closes right here. And the significance of these upper shadows, and this is basically a fight between the bulls and the bears, right? This is the bears battle, and this is the bulls, right? And there were stronger bulls on this particular candle, because the bears had it all the way down here, right? It was like this much of a wick, right? From here to here was the wick, and all of this was a red candlestick, was a red a red rectangle. It basically looked like, let's use our imagination here. This was all body. That was the length of the body. And then you had a line, a wick, that basically looked like this, right? And that was your candle. That was your, and so that we're not getting too creative. It basically looked like this, right? This is what that candle looked like when all of the sellers were in control. It opened here, it went all the way up, and it was green, and it was just a green block. This candle, when it opened here and went all the way up, looked exactly like this one does, right? It opened and it went all the way up. And then the sellers stepped in at this point, and the sellers sold it all the way off, right? And then once the price action crossed this level, it started to form this candle here, right? And it sold all the way off until the buyer stepped in at this level and then bought it all the way back up. And then once it crossed back over that original open price, it turned back to green, right? And I hope that didn't confuse you. Let's see if we can find another example. All right, so here's some good examples. So on this particular candle, the price opened at this level here, and it looks like it might have sold off at first, but then buyer stepped in and bought it all the way back up until this point where it closed, where that 4 hour, we're on the 4 hour time frame, right? Where that closed. The very next candle opened right here, and I'm gonna have to zoom into this to make it look a little bit clearer. Let's see if I can zoom into this. Oops. Let's see if I can zoom into this. Oh, I guess it's not gonna let me zoom into it. Oh, there we go. So you can see, it might be hard on your screen depending on if you're on a phone, and guys, if you're on a phone, I think it's more valuable for you to trade in front of a computer, in front of a laptop, some device where you can see these things in a little bit more detail, because they give you a lot more information than what you would see on your phone, right? So like, there's a little gap here. This candle opened up at the top of this, and you know what? Let's just do it like this. I'm gonna right click this. I'm gonna go to correct this bar, and it's gonna tell me everything I need to know about this bar. This bar opened at 365.39, which is right here. It went as high as 366.15, which is up here. It went as low as 364.51, which is down here, and it closed at 365.3, which is right here, right? It's a red candle because the open was higher than the close, right? So it opened, and then sellers brought it down, and it closed at a lower price, right? Same thing, for example, with this one. This one here, this is a bullish bar, so this one closed higher than it opened, right? So it opened at 362.18. It went as low as 357, and it went as high as and also closed at 365.78, right? And since these numbers are the same, you know, 365.78, there's not going to be any upper shadow on this, right? You only see the upper shadow if it went high, but then it got sold off a little bit. But there was no sell-off on this, right? This is a very bullish candle. This is a very bullish candle. Let's see if I can find another example. Oh, let's look at this one. This one's interesting, right? Actually, let's see what the story of these few candles tell us, right? So this doji, which this looks like it's a pre-market doji, so there's not a lot of volume in pre-market. So you know, it'll be one order or maybe 5 orders or 10 orders, and it'll open and close within that 4-hour time frame at the same level, right? So let's ignore that for now. This candle opened here, got bought all the way up, and then sold off a little bit, right? Then this candle came and opened here. All these people from this 4 hours probably took their profits, and then buyers stepped in and bought it and bought it and bought it and bought it and bought it. And while they took their profits, this was a red candle, right? But then the buyers came, and it's still a red candle. Buyers came, still a red candle with a large shadow. Once it crossed this opening price, this candle turned green, right? And it turned green, and then now closed up here. So this is a very bullish candle because not only did it go all the way down and get bought all the way back up, but the body, you know, the body and the wick of this candle is like double the size of this candle, right? We get to the next one, and it's bearish, but it's more of an indecision candle than anything else. So basically, like, buyers and sellers kind of agreed on the price for that 4-hour period. You know, for this 4-hour period that's held within this candle, you know, the price went up, price went down, but it pretty much closed at pretty much the same level that it opened, just a little bit lower, right? Because it's a red candle. The next candle gapped down, right? Maybe on news, you know, for whatever reason. But anyway, it gapped down, but then it got bought up, right? And this is a very bullish candle because there's no upper shadow. Nobody was selling this, right? On the next candle, the next 4-hour time frame, it got here. It opened up at this level here. It looks like it got sold all the way off, you know. And this low was lower than the previous day's session. Like, this low was way down here, right? And you can see that the previous day's session, it never touched that low, right? But then buyers stepped in and bought it all the way back up till up here. And then a little bit of selling pressure came and brought it back down. But it's still a green candle because it closed higher than what it opened, right? And then it continued to go. You know, it's bullish. It's in a bullish trend, so it continued to go. So I just want to compare the story that I told you, you know, of these candles here, right? Where it went up, it came down, it went up, it stood around for a little bit, then it gapped, and then it went up, and then it came down, and then it went up, and then it continued to go up, sold off a little bit, right? I just want to compare what you see with the candlesticks to what you would see with a line graph. You don't see much. I mean, all you see is it goes up and then it goes sideways, and then it goes up and then it goes sideways, and then it goes up and then it goes sideways, and that's not really truly what happened. I mean, in the grand scheme of things, if you're zooming out to like larger time frames, and yeah, it went up and it went sideways for a while, but it's important for me to see all of this extra data that I can get by looking at how much selling, you know, how much buying pressure is on this lower shadow versus the selling pressure that's on the top of the upper shadow, right? It's important for me to see this doji here because I know that there's going to be a big move that usually follows these dojis, and it was a big move to the upside, right? It's important for me to see that this was a big bullish candle based on what I'm seeing with this large lower shadow, you know, showing you a lot of buying pressure, plus the body that is pretty much the same size as the previous body. right? And the candlesticks just don't cut it, right? So, and I know, like, you know, this is me slandering Robinhood at this point. I know that Robinhood, they have candlesticks, but their candlesticks are not up to date. I think the candlesticks on Robinhood.com on a computer is much better. But anyway, this is pretty much to show you what the benefit is of using candlesticks versus lines. So let me show you something real quick. I want to show you something special. So let's go to these two candlesticks right here real quick. These two candlesticks. I'm going to zoom into a time frame that's much smaller, basically zooming into it into that time. So here we go. So all of this price action occurred within those two candlesticks, right? The line that I saw on the 4-hour didn't tell me all of this. All it told me was that it went up and it went sideways, right? It didn't show me that it went down and hit a reversal here, right? It didn't show me this reversal, this bullish reversal here, right? It didn't show me that there was a potential support, potential resistance right here that we busted through and then ran, right? This actually has some of the same characteristics as that larger time frame does on a smaller time frame, right? You know, so you get so much more information with candlesticks than you do with line graphs, right? So I'm gonna go back to the 4-hour so we can see exactly what that looked like, right? You know, so it was just these two candlesticks. If I were to switch this over to line, those two candlesticks, that's an 8-hour period. You know, in that 8 hours, it just looks like it went up, right? Let me go back into the 15 minutes so you can see so you can compare what it looks like. You know, on a 15-minute, it gives you a little bit more data. Like I can see a reversal here, but I can only see the reversal after it's happened, right? I didn't see the upper shadow. I didn't see the lower shadow forming. I didn't see the buying pressure actually stepping in and buying it up. And, you know, and so I wouldn't be able to know to enter a position based on what I see on this line. Like I don't know where the support and resistances are on this. It's just not clear, right? You're not getting a ton of information with this, as opposed to, you know, a candlestick. This tells me that this is a potential reversal because of that buying pressure, you know, and this candle almost met to be the same height as this candle. And I bet you if I looked at the volume, I bet you the volume would be pretty much the same on these two candles, right? Or maybe even greater on this one, right? And then I wouldn't have noticed that there was on the line graph, like there's no way of telling that there's a resistance right here that we need to get through, right? But here I can see it clearly because the buyers came and bought it back up, but then sellers brought it down underneath this level. Over here it opened, buyers bought it up a little bit. As you can tell with that shadow, the sellers brought it all the way back down, and it closed over here. You know, it opened here, it went down, and then buyers bought it back up, right? There's a lot of information in these candlesticks. And then I see that here it got closest to retesting that 367.58 level. And then on the very next one, I said, you know what, let's go for it. And then they went for it, boom, and they bust through. And like I would have taken entry on this play, right on this candlestick, right? You know, if you want to get more granular, I would have taken an entry on this play. Probably after seeing this candlestick, because I like to jump in on the retest. So I would have probably jumped in here, and I would have took this candle. I would have took this play from here to, you know, maybe here. Once the reversal is confirmed, then I would have got out the play. So one of these two candles, I would have got out the play. But yeah, I mean, you know, and again, just to nail it down, right? Just to beat the dead horse. I don't know when to enter here. Like I don't know what I'm looking at. Like I'm not getting a lot of information here, right? I can get faked out on this reversal here. I can get faked out on any of these here. But if I have candlesticks, and then I'm really truly armed with the most information that I need in order to make an informed decision as to whether it's a good position to enter, what's a good entry, when should I take my profits, when is there a reversal. You know, there's a lot of information that in a story that's told by candlesticks that isn't told by line charts, right? So yeah, I urge you guys to use candlesticks. Maybe line charts are good for like checking your P&L and seeing how much you're gaining. But when you're in a play, I think it's much more important to see exactly what's going on, see where the trend is. You know, see if it's a true reversal or just a fake out. You know, and there's things that candlesticks tell you that line graphs don't. So I just want to take that moment to share that with you guys. I hope you guys get some value out of it. Peace. All right, so I've quickly just wanted to throw this at the end of the video so you can see what candlesticks and line graphs look like live, so that you can compare the information that you get from just the line graph versus the candlesticks. So I'm just going to draw some quick price levels, the way that I would in a normal charting session, right? I draw my resistances, which end up being potential supports, right? I see that there's like a possible kind of uptrend here, so I'm just going to put a quick, I see an ascending wedge, so I'm just going to draw the wedge real quick and see how price action reacts to it, the way that I would, during my my trading sessions. So let's so let's put it right here. And yeah, so like if I'm looking over to the right, I see how the line graph is reacting to every movement, and it basically tells you where the price is at. And like if you look at the price is the same on both sides, but the candlesticks contain much more information, right? Like I can tell by looking at the right that like we're downtrending, but when I look at the left, I can see how much actual selling pressure there is on these last two candles, right? I can see the buying pressure and the selling pressure on the green candle, the fourth one, to the end. If I'm looking at this, I can actually see how these candlesticks that touch this lower trend line, on the ascending wedge, how they respect that trend line, versus on the right, I can't really tell how they interacted with it, right? So yeah, I just wanted to show you guys how it looks, a live look pretty much, of what you're missing out on if you're using line graphs, and why you should move over to candlesticks.